Yeah, welcome back to my trading channel. So in this video I'll be revealing to you about the top analysis and how I've used the top analysis to catch this sell on this SRP USD. So let's dive into the section. So if you look closely to my screen right here, we have this sweep of liquidity to the upside, and we have a break of structure. So that gives me a confirmation that we're in a downtrend. So for me to know that I have to take a sell entry, there are some certain things I have to consider. So right here, you see this place is the sweep of liquidity to the upside. So and also we break the entire structure to the downside. That's a break of structure. So after that, we have to look for a premium and discount zone. So after that, so you just take your fib tool right there, you just place it to the swing high, to the retracement point, to the swing low. This is it. So anything that is below this 0.5 is a discount zone, is a buyer's area. So anything that is above this 0.5 is a premium zone. That's a seller's area where you can sell. So take note of that. So after that, I have to look for my structural liquidity. What the structural liquidity is structural liquidity is the last low before the main low. That's our structural liquidity. And for a market structure to be valid, you must have a structural liquidity. So to determine our structural liquidity, we have to place the Fibonacci tools from the swing high to the break of structure zone. So what you just have to do is you just place from this swing low to this break of structure. That's what you will do here. And this our break of structure right here is also called a transactional liquidity. What the transactional liquidity is? The transactional liquidity is a liquidity that tells us that there will be a possible reversal. A transactional liquidity is valid. It's valid anytime we have a break of structure. If we have a break of structure, it let us know that there will be a possible reversal. So, and you see, if you look closely right there, you see this low right here where I place. Let me put the sign there. That's the liquidity sign. So you see this place right there where I place this sign. That's my structural liquidity is above the 0.5. So the structural liquidity must be above the 0.5. Take note of that. So it must be above 0.5. Let me explain once again. To know your structural liquidity, you have to place your Fibonacci tools from the swing high to the break of structure to the transactional liquidity place. That is the break of structure. So to know your structural liquidity, your structural liquidity must be the last low before the main low. And if you look closely right there, also one thing to consider is your structural liquidity must be an A shape or a V shape. The reason why I didn't use this low right there is because it doesn't have an A shape. And if you look closely to this place, to the structural liquidity I map, it has an A shape, like series of candles coming together to form an A shape. That's our structural liquidity. And anytime the market sweeps that structural liquidity, the market taps into our POI. and move to our entry. So since I've determined my structural liquidity and I've known my premium and discount zone, what are the other things I need to consider? Also, your sweep of liquidity also must be an A shape or a V shape. So if you look closely right here too, this sweep of liquidity is an A shape. It's not just a wick. So series of candles coming together to form an A shape. So this is an A shape too. Just take note of that. So you know we are in a 4-hour time frame. So and my entry is in the 15-minute time frame. Since I've known my discount and premium zone, that is, let me map it out. This is 0.5. This is 0.5 right there. That's the equilibrium. That you don't have to do anything. All you just have to do is wait for a candle to move to the discount or the premium. Anytime the candle or the movement of the markets enter that equilibrium zone, you just have to wait. So I've mapped out my equilibrium zone right here to know what's the next line of action. Since I've known my premium and discount zone, all I just have to do is to just go into the lower time frame. But before I go to the lower time frame, I have to map out my point of interest. So my point of interest is just the QM or the order block. So the other block is just the last candle before the impulsive move. Like it's either the last red candle before the bullish trend or the last green candle before the bearish trend. So right there I have this green candle right here. So that's my other block. That's my other block. But this is a 4-hour time frame and I'm using 15-minute time frame. How do I take my trade from 15-minute time frame? It's an easy step. All I just have to do is to just go into the 15-minute time frame to look for a change of character. That's so simple. You see, since I map out my POI and I don't want to take trade immediately, I have to look for a confirmation. So what I just have to do is to just go into the 15-minute time frame to look for a confirmation. So if you look closely to this place, you know the analysis is being done in the higher time frame, but we want to take our entry in the lower time frame. So right there you see you have this sweep to the upside right there. This sweep, this is sweep of liquidity to the upside, and we are breaking this structure which gives us a change of character. So after the change of character, what are we going to be looking for is just the order block. You have to look for the order block that caused the change of character, and that's our origin. That will be our origin. You have to be looking for the other block that's caused the change of character. And where is our other block? This is our other block right there. This last green candle before the impulsive movements to the downside, you see. So and anytime the market comes back to that area, you just have to place your sell entry and you cover this last week rejection to the upside. This is it, and you trade for 1:3. That's why you look closely right there. So my trade is just 1:3 to the downside. So that's how I do my analysis. So the third analysis is very good. All you just have to do is just look for a sweep of liquidity, break of structural liquidity to the higher time frame, and come to the lower time frame to look for your entry. So that's so simple, guys. So you're welcome. Don't forget to hit the like and subscribe button for more video like this. Stay tuned for my next video. You're welcome.